Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and this is your quick look at the stories we've been covering that you need to hear about. Gold continues to perform well during the second quarter. After starting on Monday around the $1,780 per ounce mark, it nearly reached $1,800 midway through the week. Experts have pointed to lower U.S. 10-year Treasury yields as at least part of the reason behind gold's uptick. Yields slipped below 1.6% this week, and some market watchers have suggested that a fall below 1.5% could send gold above $1,800. Silver has also been tracking higher during Q2, and we heard from David Morgan of the Morgan Report about his expectations for the white metal in 2021. He admitted that the current $25 to $27 per ounce level is a little discouraging, but he thinks it's possible that silver could reach the $33 to $34 range this year. The interview with David also contains an interesting discussion of commercial silver users like Tesla, and you can watch it right here on our YouTube channel.
If I was sitting in Elon's position and I got that letter, I would have somebody run it down and say, is this guy a crank or does he make sense? I want you to do a deep dive. I want you to go into the silver market from the commercial side. What's the inventory look like for silver users? And what are we going to use over the next 5 years? What are the price projections like?
Taking a step away from precious metals, there was big news in the lithium space this week as Galaxy Resources and Orocobre announced plans to merge in a deal worth 4 billion Australian dollars. According to the companies, the new entity will be one of the world's 5 top lithium chemicals companies. M&A activity has been going strong in the lithium space lately, and some experts believe it's likely to continue. Paula Rojas of Synergy Resource Capital and Reg Spencer of Canaccord Genuity both believe other moves could be in the cards. Paula expects to see at least a couple more lithium deals this year, probably at or below the $100 million mark, while Reg thinks M&A will focus on higher quality assets. He also suggested that we could see non-lithium companies come into the industry via acquisitions. With lithium in mind, we asked our Twitter followers this week if they think we'll see more M&A activity in the sector this year. The poll was ongoing at the time of this recording, but most respondents said they think we'll see more large deals. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. Finally, in the cannabis space this week, INN spoke with Dan Aarons of Advisor Shares about what happened in the market during Q1. Dan has favored American cannabis companies for a long time now, and in the first quarter, he was surprised to see American stocks lag behind Canadian companies in terms of share price performance. Dan said that U.S. cannabis companies have put out rather spectacular quarterly earnings reports, but it hasn't been reflected in their share prices. Meanwhile, Canadian marijuana companies have done well in the stock market with less impressive financial results. He hopes to see a change in the tides as more investors realize that the success of U.S. multi-state operators doesn't depend on federal cannabis legalization. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. See you next time.